Thanks for making time. And I've been excited and telling our team all week. I'm juiced to talk to you.
Awesome. Yeah, it's love what you guys are doing. Love the learnings that come out of just connecting the ecosystem, and you get brilliant people together sharing and riffing on trends and opportunities. This is really, really exciting.
Thank you. I appreciate it. And I appreciate your haircut as well. So
I just can't pull this off, Zach.
Don't worry about it.
This is admire that.
Yeah. So we're talking about human, open, and connected. So those are three interesting words. And let's talk about what those mean to you, Derek.
Well, let's start with human. Throughout my career, I've always been fascinated with how humans interact with money. Started from the day my dad lost his job, and my brother and I had started a little business, and we handed our paycheck over to our dad, who was unemployed, and that was my first recognition of what money was. But then how people interact with money, how money is the greatest stress in people's lives. It's not remodeling a home. It's not getting married. It's not transitions in life, whatever it might be. It is one of the greatest stresses is simply money and decisions associated with money. Behavioral economics teaches us that we as humans we don't like making decisions. And sometimes we try to outsource those decisions to another human. And that's a lot of what banking has been, is human to human interactions and how decisions are made. And so the human element of this is understanding how humans make decisions, how humans interact, and how money laces through every part of our lives. And some of our biggest decisions in life hinge on money. So it comes down to then how humans interact with money. If we look at the design of the future of financial services, and that's one element that's great to see is increasingly over kind of the fintech wave that we've experienced over the past decade, that the term has been around, human-centered design has emerged in financial services unlike it had previously. And that's great to see. There's still an enormous amount that can be done around not just designing a mobile banking application, but truly human-centered design around the end user. When we talk about the humans of the future of finance, it's about the end user that is the consumer. It's the small business owner that is making decisions about their business as well as their own personal finances and how they blend together, and how you design an interaction platform that enables those entrepreneurs, those startups, those founders, those small businesses to be able to manage both aspects of their lives. And the 6 software platforms that they use to run a business, are they designed to be open? And we'll come on to that. How much do they connect versus how much is it just designed around an experience? Because banking, financial services, and what you said in your opening is this embedded concept, this embedded theme is not just about fintechs. It's about it's about businesses and it's about money. It's about the future of finance. So the human element is around understanding that ultimately banks, brands, financial institutions monetize human interactions. And the monetization of human interactions happens in only one of really 2 ways. And that's either with a tap on the glass or the phone or a tablet or a keyboard or signing a paper and saying yes. And in the institutional businesses, there's still a lot of paper. And so designing the migration of those experiences of transforming and rebuilding historical financial institutions into a human-centered view versus a product-centric view as to how historical financial businesses have been built. Designing around that end human user is huge. But unlocking that design of the end human user experience and connecting across products, across experiences, across silos, requires the next part, which is open. And
I didn't mean to. Go ahead. Yeah.
Go ahead.
Well, I just the anecdote that you talked about your father and that experience was very powerful for me as a listener. And I think this concept of human, as you're describing it, was something that kind of cut across most of our day yesterday. And I think when we were interviewing some of the senior leaders there, it always came back, and this is different than from 2 years ago. It always came back, well, we ask our customers, we talk to our customers, we talk about our customers, and it was like, it always came back to that humanity. I really appreciate that. And so you just alluded to, I guess, the second part, to open. It sounded like there was some connection to data there and the value of data. What do you mean by open?
So the term open is frequently used in financial services, and more broadly when we talk about open ecosystems, open innovation, open data, open banking, open infrastructure, all terms that talk to creating and freeing captive data. Because look at how the ecosystems evolved over the last couple of years, decade. And what used to be captive data within an organization was an organization would build a physical footprint and they would have data associated with their captive customers, and that they would use that as their intellectual property to create the future. Increasingly, it's open data that organizations are opening up their data. If you look at Europe, it's largely driven by regulation that has required the opening of data, and making that data available across products, across humans or the individual, and making that available for me to understand what data is captured on Zach, what Zach can know what data is captured on Zach, what Derek can know what data is captured on me. And again, that's largely driven by regulation, and many institutions in Europe are embracing that, but many are trying to protect their history associated with that. The future is all about the ability to free that captive data, but then to also be able to capture the data that is out in the open ecosystem. Just use as an example how many interaction platforms that you have in your home, Zach, or the end user. Just think about how many compute interaction devices you have now that connects you as a human to the broader interweb that is open. And rewind the clock to just a couple of years ago as to how many you have versus how many you have today. Many people will have a phone, they'll have a tablet, they'll have a watch, they'll have a health monitor, they'll have a workout machine in their home that is also connected to the web. They'll have a security camera, they'll have a thermostat. So we have 10 plus devices that are then creating 10x data. Mm-hmm. So if you think about a human walking around that's creating 10x, each of us is creating 10x data. And yes, there's lots of data statistics that dimension how the data is being created. But with the power of the future for organizations is the translation and of a recognition of the mindset of the data that sits outside of their captive data, and how to harness that data. And then that's where the third part comes in of connected, is that how do you connect that data back to, that is the captive data, as well as the open data, the open platforms, the open ecosystem, and how you connect that back to the point of interaction.
So let's dive into that connected piece. That's the third of the triumvirate, I guess. Is that more about the ecosystem of the fintechs and banks and how they serve their clients and customers?
Well, there's so many aspects to the connectivity. There is the ecosystem play, and how I'll never forget in 2013, 2013, I was in London, and there were a number of us in London that we're trying to build the innovation ecosystem of London, mm-hmm. to light up the innovation ecosystem of London. And believe it or not, there was like this inferiority complex that London wasn't this innovation ecosystem that perhaps Silicon Valley and other parts of the world were. They had all the great institutions, the academia, the headquarters of financial institutions, but there was this feeling that perhaps it wasn't a connected ecosystem. So we did a lot to connect the ecosystem of London to create kind of the fintech capital that London became and is very much a part of. But that's about connecting humans in the ecosystem to then connect their businesses to then create ultimately the ecosystem. But additionally, I'll just use the business that I run today, Galileo, as an example of that, of how we connect humans and businesses to create the future of finance. So our business today, we announced our earnings yesterday as part of Galileo, as part of the SoFi companies. And we announced that we have 89 million user accounts on our platform. Wow. And that is humans interacting with a financial product on our platform. Underneath those 89 million end user accounts on our platform, there are 150 entrepreneurs, creators, builders, innovators, disruptors that had a dream that may have walked into the Galileo office, and I've been here for 6 months, but some of the stories that we're experiencing now, Zach, is that we're the translators of entrepreneurs' dreams into business reality to help them take dreams of an entrepreneur walking in and saying, I would really like to be able to solve this financial problem for the underserved, the underbanked. I have a vision and a dream, but I don't know how to do it. That's where you take the connectivity of connecting that entrepreneur's dream into the infrastructure of money and the ecosystem to be able to build a business that they may have a view that they want to own and create the user interface. Great. We'll help advise and help you build that user interface. You can own that interface. How that interface and what financial products are then created, whether it's Moneyline that's trying to help use data to help predict customers' liquidity and when they have available funds versus when they may need funds. Connecting them into the data as well as the financial products that then plug into the financial ecosystem. There are companies like Galileo that have the privilege of connecting humans and their dreams into making those real to have impact in society and into business that then creates jobs for people that puts them on their financial trajectory for life. And so connectivity, as we look at it, is yes, the ecosystem, but it's then also how do you connect the ecosystem back for the human that could be the consumer so that they get the benefit of the impact of new innovation and products and services, that they get a better holistic view of their financial life that is enabled by the humans that are the founders, the creators, the disruptors, the builders of the future. And we happen to provide the platform that makes that possible.
That's awesome. So I'd love to hear from you, Derek, what consumers are saying right now and how that's informing the strategy as you're 6 months into your tenure. I'm curious about that.
Yeah, so we conducted some research as we have 150 plus neobanks, these new digital banks that are building the future. And in the United States, it's 80 to 90% of the major neobanks in the United States operate on our platform. And looking across those platforms, you get and how customers are interacting on their platforms and interacting with their money, we get some very interesting insights. We also conducted some research recently to end customers to see what end customers want to complement our data. And that external research, a lot of it's kind of what you might anticipate. There's a couple of interesting nuggets that come out of it, though. You know, the first one is that the average person has 2.5 accounts. That's on average what they have. We all know that we have maybe 2 or so 2.5 accounts. Just assume that the average person has 2.5 accounts. The second one is that 21% of adults today use a digital-only bank.
21%.
That's a pretty big move from.
It is, yeah.
And part of that is driven by COVID. Mm-hmm. You know, pre-COVID, Zach, 50% of the banks in the United States did not have an online checking account opening.
Wow.
You physically had to walk into the old model of into a physical branch just because it wasn't possible. Now, COVID's changed that. COVID's changed that a lot. And so digital is a possibility, but it's one thing to have one account, but to have your primary account. We're not 1 in 5 adults in the United States have their primary account with a digital only bank that has no physical footprint. That's a pretty big trend. The second one is that there's about 15 percentage points satisfaction difference between digital only and traditional brick and mortar. The customers have an 80% satisfaction rate on digital only versus a 65% on traditional banking. Mm-hmm. Now, we don't have a direct parallel for this because we haven't conducted this research. This is the first time we've done the research in this way. But a parallel against this would say that last year, there's a report done by Cornerstone that said 4% of Gen Zers would have a checking account with a Challenger, but now it's 15%. Mm-hmm. So that's starting to move. There's a lot more that I could highlight, but there are just two additional points that I'd say that are relevant. That if 21% of adults today have a digital only account, 61% are actively considering moving to a digital only bank. So that's pretty significant itself. And then what's interesting is asking these participants where they would consider doing their banking, they give the categories that you might have considered in the past that have offered financial products, that being internet and wireless providers. There are the AOLs of the world that offered a credit card 20 years ago. There was that natural extension of embedded finance in that way. The second was, employers. Bank at Work has been around for a long time. Third is national retailers and warehouses. But the number one category that was referenced surprised me. And that was streaming providers. 48% of people said that they would consider having a financial services product related, an embedded product related to streaming services. So pick your platform, whether it's Netflix, Prime, Paramount, HBO. Hulu. Human consumers feel that a natural extension for them, out of our research, indicates that streaming services was an area of interest. So those are some of the insights that we've gotten out of our recent research.
Appreciate that. And I know we're talking about, based on this research, very much non-financial companies moving into this embedded finance space. What do you see as one of the leading providers, platforms in the space, as some of the key challenges and opportunities for these new players to move into embedded finance?
The first is being really focused on and staying true to the mission and the impact that you want to drive, and the value proposition that will deliver that impact. And the closer connectivity, the more tightly coupled the value proposition is to the end impact that the founder, the fintech, wants to be able to create. That coupling is incredibly important. And we could talk about how to build that value proposition to have impact. But that's probably the first principle that I'd mention. The second is the essence of strategy is recognizing what you don't do. And I think this is a great principle of leadership, of human leadership, as well as in running a business. In recognizing as a leader what you're great at and what you're not great at, and surrounding yourself with people that are great at just what you're not good at. In the same way, a business understanding that they don't have to do everything, and that there is, and this is a big part of what the sharing economy and this concept of open architecture, open ecosystem has created, is the ability that you don't have to have everything captive. Mm-hmm. So understanding the impact that you want to have, how tightly coupled that is with the value proposition, but then how connected that is to then what you actually own and build yourself versus what you can partner to deliver there are companies that do a lot of what you may want to be able to deliver. And so being clear on what it is that you want to build and deliver and own, I think is pretty critical. And lastly, a recognition that in this new digital interaction world, sorry, my notifications there, is how do you build trust in a distributed world?
Mm-hmm.
You know, the blockchain, crypto, DeFi world is a great analogy for human interaction, and how as a company driving embedded finance, if it's ultimately recognizing that monetization again comes back to a human interaction, and how do you build trust in a human interaction where there may only be one human involved, and that human is the end user and the glass. How much of our day today is you as a human and the glass? And so really thinking through the connectivity of the impact of the value proposition to where partners can play, and how that then translates into trust, and how you build trust, not just on a single transaction level, but how trust is built repeatedly through every interaction, I think is incredibly important.
Awesome. We're getting near the end of our time together. I also wanted to talk to you. One thing that came up yesterday as well is sort of the different approaches the U.S. and Latin America have taken versus the U.K. and Europe in terms of regulating open banking. And I'd just love to get your feedback on what you see playing out, and what we may need to do to achieve the promise of open finance.
Yeah, the promise of open finance is really all about connecting the ecosystem. There are great examples in China of where ecosystem was allowed to flourish. Just take person-to-person lending and person-to-person payments in China. I ran a joint venture consumer finance business in China a couple of years ago. And at one point, there were 1,200 person-to-person finance businesses that were allowed to flower and bloom. They didn't have licenses. There was regulation that only 29 companies had licenses, but it was allowed to have this proliferation of person-to-person finance businesses. And that lasted for maybe 24 months, a little more than 24 months, 18 to 24 months, and then all of a sudden, regulation was brought down, and 29 businesses were allowed to operate, and essentially 1,100 closed overnight. In Europe, the regulation has played a big role in opening up open data and open banking, and allowing the movement of data. We see in Latin America the sandboxes and the appetite for open banking and the need for what licenses are required in order to create the end user experience that can be created. Is also playing a role. So the role of regulation is a big impact and a big part of the ecosystem that perhaps is less understood and at times. Then understanding just where the humans are interacting and how that then traces through into the plumbing of the financial services industry is critical to understand where on that value chain new product innovations can be created. And each geography is very different. And that's one of the greatest learnings that we can get, whether it's out of China, whether it's out of Europe, whether it's out of Latin America. Looking across markets is one of the greatest ways to bring innovation to your own market.
Derek, it's been great talking to you. I really appreciate the time you made for us and attending the Big Bank Theory Conference. There were a couple of questions that came through. We don't have time. Maybe I'll send those over to your team. I think they're interesting questions. Sure. We can answer them offline as well. But again, really appreciative, and good luck with everything going on at Galileo.
Awesome. Thanks, Zach. Thanks, everyone.
Bye.